Well, good evening all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up, and this wrap-up is for Thursday. It seems so weird missing that day yesterday in the market, but it is Thursday, the 2nd of January. Happy New Year to one and all. Another down day in stock indices. So what have we had? 4 or 5 days in a row down now in the S&P and the Dow. Certainly if you go by the official way that Yale Hirsch did the Santa Claus rally, it didn't occur. His dates were the 26th to the 2nd of January. Now, some people extend that to the 3rd. I've seen that when it's on a Friday. We'll see if they do that or not, but it doesn't matter. It didn't work. Some people will say now it hasn't worked 2 years in a row. The market is peaking out, blah, blah. I don't know how you can infer that. To me, what you have to look at is the market's had 2 big years. 20% gains plus in these indices, and at the end of the year, profit taking, window dressing took place, and that's it. If you go back 50 years, including this year, you're still about a 77, 78% winning ratio each year if you look at the Santa rally. So this losing year with the last one doesn't mean that much. It costs money if you were wrong to trade, no question about it. When we look at the rest of the market, Amazon up a little bit, but Netflix got hit, and I like that. I definitely want to start covering Netflix in a big way. I think it's time that we look at that. Notice Tesla's giving a lot back. It did not hit its sales numbers. Didn't miss it by much. I think 14,000 cars. That's not a lot. They still did 590 some odd thousand. You know, it was pretty good numbers. But BYD has surpassed them in China. They now have to discount in ways to move their cars. They haven't got a new product that's come out in a long time. And very frankly, when you put up all the new EVs against it around the world, they're not the cutting edge that they were when they first came out. So it's time for a change. Elon, time for a change. Give the car a cool look, and let's make changes that other people are doing. When you look at the metal markets, you did get a rally. So money came plowing into them today. Copper even was up 30 cents, which was, to me, a bit surprising. China hasn't done anything to support that market. Microsoft down. AMC just sitting here at the $4 mark, trying to make something happen. And NVIDIA gaining again $4. In terms of the news for tomorrow, you're going to get the ISM coming out with the U.S. December manufacturing sector index at 9 in the morning. The expectations are for December to come in at 48 compared to November's 48.4. And we'll get the natural gas storage report. So you're not getting at the beginning of the year an awful lot one way or the other than people's ideas on what the market may or may not do. You have the opportunity to take advantage of my charting course sale for the rest of this week, and that's it. I won't offer this good a deal again. It cost me too much money. I've shared that with you. If it just didn't work for me, you get the deal. $596 of value for $299. It's quite a neat deal. We'll talk about it at the end of this. You can always move your cursor to the top up here to see that, and you can go to our website, iraepstein.com, and you'll see a New Year charting sale. All right. So let's go and look at SoFi, but before I do so, do me a favor. Watching me on YouTube, many of you do, please write me. What stock do you want me to cover? For those of you that are my subscribers, you have a different email, write me. I will choose one of them and go with it. This one was a pretty good one to cover because it was sideways action and the market's acting like it's breaking out to the downside. You've got lower highs, lower lows. You're underneath everything for the first time in a while. The market fought a battle at the 18-day average of closes over the past week and a half, and now it's letting go. The Bollinger Band will be the key right here. Your targets could be, if it just fell out of bed, 1108 to 907, that'd be a pretty hard break. I don't know that that's going to be in the cards. The Bollinger Band came in, as you could see, at 1413. That's where the better support of the market is, and you're oversold. Oversold is important. If you take my core charting course, when you have an oversold market, why are you looking to deploy money on the short side? The trend is down, the bias is down. So that's the first thing. Second thing, selling under a Bollinger Band, that doesn't mean the market can't just fall apart, but it only stays under the band 5% of the time or over it 5% of the time. I think you can do better than selling it under that. Oracle can't get away from this 100-day average. Had one attempt at a good rally, didn't do anything with it, and fell right back down. Not a pretty looking chart. CrowdStrike. So now I'm getting interested in the long side of the market on the next move that says a bottom is in. We're not there yet. Don't know where that is, but that's what I'm looking for. So far, the Bollinger Band bottom number has held, but you're very oversold. Rivian. Just back and forth action against the 18-day average for a while. Now, I frankly don't think you're getting much under the 1208 area. Today you got to 1276 and bounced away from that by 50 cents. That's the area that I think is going to offer some value. The weekly charts will be a lot of fun to look at. When we take a look at K-Web, down and away. And underneath the 200-day average. This is why I didn't understand copper rallying. The news coming out of China has not been good. Even their factory orders, their expansion numbers are 50.5. 50 is the demarcation point. Last month it was 51 and a fraction. So it keeps falling, and that is not good news. And you're seeing this in part of these, but that's the internet part of it. Now you're going to see a lot of outside days down. They're important. That's why I have an outside day course. You have it right here. So in this market, unless you take out today's high in the next 2 days, the market's still saying continuation of a pattern. Take that out, and then I think you can make a run to either the 18-day average or the 200. Then we get to XHB, lower highs, lower lows, yeah, and an outside day down, even more bearish. XLF, the same thing. All of these, you look to see if today's highs are taken out either on Friday or Monday. If they're not, the continuation pattern's in place, but I think the pros are already short, looking for these numbers on the lower side. In XLI, as I look at the market, you've got the 18-day average dropping down by the 100, outside day down, market falling down, not much you can do with that. In XLE, higher lows, higher highs. Now we look to see what's going to happen. You did lose the embedded reading the other day. And by the way, I have been tracking for my paid subscribers with them each morning lost embedded readings in the ETF. And we just wrapped up all the Decembers. So it was amazing. We had 16 potential trades, 2 losers, 14 winners, and winners money-wise and everything else overwhelmed the other. So as you know, for 2 years I've been working on a technique, and I'm sharing that technique with my paid subscribers at this point. You should join us. In GLD, lower and low, higher high, and the market over the 18-day average of closes. In SLV, higher high, lower and low. You can see where the market's at right in here. You're sort of in no man's land. You got to bounce in all the metals. I can understand some money moving in early, but I'm not seeing a trend trade. And copper looks still like a bear market that wants to go even lower before it finishes itself off. BND tried today to have a good day. It actually had an outside day up. It doesn't look like it since it closed at the bottom, but you took out Tuesday's highs and lows, but you kept the embedded reading. And you still have a market that's got a pattern that's difficult at best to trade off of. In UUP, more of the rally. This big break is $1 some odd. That's why it's so big in through here, and I haven't figured out yet why it did that, all right? But it's trying to fill the gap. That's the way to say it. If you look at the dollar index futures, they're at all-time highs for the lifetime contract highs, 109.50 now. I was talking in price counts. Do you remember 109.87? You're 37 cents away. For all purposes, you're there. And in FXE, the market coming down. This one makes sense. You go down and you're at the lowest lows because you're taking the euro down to the 103s. Parity could be around the corner if the dollar gets further strength, but I think the dollar is getting up to a point where it's got to do some reconstruction. We'll see if I'm right or wrong. I'm certainly not bearish, but I wouldn't be chasing it at these levels. So as I said, if you want to take advantage of my course, it's so simple. First of all, we're offering it at a substantial discount. It ends this week, the sale. Normally, the course goes for $599.95. $299.95 is the price. In addition, you choose from a Bollinger Band or an outside day course. You get either one free. I sell those for $120. Then you're going to get access to the morning subscriber videos, the morning everything I've got, the charting software thrown in, $597 value, $596, all for $299.95. It's January 2nd. You are not going to see this sale again. So if you want to take my courses, you can bank them. You decide when you want to take them. You can give one away as a gift. We don't care. You can give both away as a gift. Your call, whatever you want to do. Go to iraepstein.com. You'll see on the top left it's there. Your cursor will be up here. It'll take you there as well. I'm Ira. I'll catch you first thing in the morning.